trading at its best.
All right, I think we're about ready to get going. We have, thanks for everybody's patience. We've got a lot of people that were sending in requests that wanted to join us in today's webinar. So we'll go ahead and get started here in just another second here. I think we're good to go. Okay. All right. We have a good-sized group with us today. Okay. Well, let me introduce myself to those of you that have not been in one of our webinars before. My name is Nate Muno, and I work with the TradeWest Forex group and Mike Swanson. And what we're going to do today is every Friday we hold what we call a Forex 101, webinar, and we go through kind of the fundamentals of training and thought process, trader mindset, these different things. We go a little bit into, we prefer more often than not MetaTrader and different platforms, different strategies. Eventually we'll get into some different strategies and systems that we might recommend, things that we think that might help you as traders start off on the right foot. So as we get started here, like I mentioned before, if you have a calendar that you keep track of things on, it might be a good idea to go ahead and pull out that calendar, because we're probably going to use it today. Some of the other webinars that we've done, I've noticed that because I'm kind of long-winded, I will go and go and go, and rather than create some of these that go for an hour and a half, 2 hours, I'm going to try and close them off a little bit sooner and make them a little bit easier to watch, as opposed to sitting down for a full feature film. So if you have any other questions or any questions during the webinar, please notice in the top right-hand corner you should see a little orange box with a white arrow. By clicking that little white arrow, it's going to extract a little menu. You're going to have the opportunity to communicate with us and interact by going to the chat. So any questions that you might have, please feel free to post those questions and get involved with what we're doing. That's really what this is all about. Let's go ahead and make sure everybody can hear us okay. If you can, go ahead and give me a solid yes or some kind of an indication in the chat box, just to make sure that you guys know where the chat box is and that you can hear me all right. Okay, it looks like just about everybody can hear us pretty well. Okay. All right, we'll go ahead and get started. Once again, if we're posting something, or if we bring something up that you have any kind of input on, feel free to shoot that to us as well. We'll go ahead and if I can catch you in time as we're going through this, we'll go ahead and post that and refer that. Okay, so as we've mentioned, we've done previous modules. In different modules, we've talked about everything from what is a pip to MetaTrader platforms and actual strategies and tools that we use in the TradeWest Forex group. So please, if you've got any requests or interest in watching some of these other webinars, please let us know, and we'll help get you lined up with those. Okay, we've got a few more people. Looks like they're trying to get in, so bear with us one more second here. Okay, I think we've got everybody in here now. We have some more requests coming in, so we'll go ahead and keep moving here. Okay. Module number 6. Today we're going to dig in a little bit to it really could have very likely been the very first thing that we talked about. We had a lot of people requesting kind of just terminology and a little bit of explanation and better understanding as to what different things are. This, to some degree, is an extension of that, so we're kind of reverting back, but it's an important one to talk about and go into. Keep in mind that if we need to approach any suggestions or recommendations, questions, we'll go ahead and address those with the chat box, so please familiarize yourself with the controls. Okay, we'll go ahead and keep moving here. So at the very top of what I would call the importance list, there's one thing, there's one factor, or one very important thing to consider that's either going to shoot you towards success or could completely annihilate any hopes or dreams that you have of becoming a successful Forex trader. And this one simple concept, once you gather and put together a solid understanding of what it means and how you approach trading is addressed, it's going to make a very big difference as to whether or not you're successful or whether you just blow money and lose. I'm going to throw you a little curveball here, no pun intended. So I want to see what this very important thing is. I want to see how many of you guys actually know what I'm referring to and can kind of get an idea. I'd like to see where you guys' thoughts are and see if you guys can guess this. And I've got one person in here that I know is going to hit it right on the head before I go into it. But let's see what you guys can. Let's see if you guys can figure this out. What's the one thing? I'm looking for one specific word that if you figure this out, everything else is going to be 100 times easier trading. Now, it's not to say that you have to have all the answers, but an idea. Okay, I've got a couple answers here. The person that I thought was going to hit it right on the head instead had to say unlimited money, and that's also the right answer, folks, but I don't think that's going to fit for most of us. Okay, Ed is saying tools. Okay, and here's our first hint. Starts with a T. Come on, guys, help me out. I need some more answers here. I'm getting some good responses. Unlimited money or access to someone else's bank account. That doesn't work. No. Okay, I think we're getting closer. I have another tools. Okay, I'm going to give you one more hint. And like I say, I threw you a curveball with the picture that I sent you. Come on, guys, it's easy now. This is a home run. Let's see if you guys can get this. Help me out here. Use that chat box. Go down and click the little orange box with the white arrow. Go down to chat. Shoot me your answer. What are we talking about here? Keep in mind, this is Forex 101, guys. If any of you, if you can't get this after my second hint there, everybody is going back to demo accounts. And not only demo accounts, but you're going to have to sit in the corner while you trade, and that's not fun. Thank you, Ed. Thank you very much. Timing. So this is huge, guys. This is going to make or break you as a trader. So what I want you to consider when we look at this is I want you to look at it in different ways. There's different kinds of timing that are going to affect you as traders. Okay? There's different aspects of it that that quite frankly they're going to make a very big difference as to whether or not you can comfortably trade on a regular basis or not. It makes a very big difference as to how you approach your trading, and quite frankly, it's something that if you can't fit in and you can't consider it, you can't make it a focus, you might just be better off not trading at all, as bad as that sounds. So what different kinds of timing do you think we're going to talk about? Okay, we're getting some good answers. So yes, and when I say bring out your calendar, obviously I'm trying to take a little bit closer dip into not your personal lives, but what you're doing on a regular basis. I've seen several traders that get very interested in trading Forex, only to find out that really they either don't have time or they don't make the time to do what's necessary to be able to trade comfortably. So it makes a very big difference. And so there's different levels of timing. The other timing that we're going to talk about a little bit is timing in the markets and how we do certain things. So I apologize for throwing you the curveball, but I wanted to make sure that you guys really considered this and thought about it. It was kind of fun playing with you, so I appreciate it. But it's about timing. Now there's a lot of different ways to consider how you do what you do, and when you do it. Obviously, there's different angles of it. It's not just that you have to hit it. You don't just have to make contact in trading Forex. If you want to hit a home run, there's a certain way to do it. And we're going to talk a little bit about that. Okay, one of the resources that I really like to use, and if you're just getting started trading, this is one of those things that you will very likely want to do. But I can't impress enough that when you get started, there's certain things that are comfortable and certain things that are uncomfortable. You have to be able to identify the things that aren't comfortable because they only get worse over time. If you ignore them, chances are they're going to be something that comes back. It's going to fester. And as you're getting started, keep these things in mind. Consider them on a daily basis. Consider your approach and how you do things, because we are very big into developing good habits that can kind of carry through and carry you really throughout your journey or your really what you're doing in your trading career, because that's essentially what it is. If you're getting into this to make some extra money, it doesn't matter one way or another. It's a career. It's something that you can take very seriously and do very well with. First definition that we want to look at. Definition of swing trading. So if there's different kinds of traders and different things that you can do, I want you to consider some of these things that we're talking about here with the timing factor and all these other things that make such a big difference for it. So I want you to consider what kind of a trader you are. I'm going to go back into this definition here in 1 second, but I want you to think, if you've heard of different styles of trading, different types of trading, you've heard several different definitions or names for approaches to trading, I want you to think, if you already know those and you're already familiar with them, I want you to think of what kind of trader you are. What do you need to know to determine this? That's what we're going to kind of go into here. What are the fundamentals that you should understand when making this determination? Well, at the very, very beginning of it, in my opinion, I've seen many traders that really struggle and hit a brick wall right out of the gates simply because they did not realize that trading can be pretty demanding. They get into trading because they love the opportunity to have a very open schedule, to have the chance to do things when they want to do things, and this is kind of a how do I put this? It's a common misconception that people think that they can jump in, do something for a little bit. For example, I had a trader that I was talking to about a week ago that was trading one of the systems that that we've developed, Momentix, and I looked at the time frame that he was trading it, and he explained that he just was not getting things done when he needed to. He was starting to utilize the other tools on the trade management side, and really that was the answer, along with changing the time frame that he was trading. He saw that on some of the higher time frames there was incredible win rates, and so it's one of those things where you have to know the strategy that you're getting into, but part of that is understanding the importance of timing. If you can't get into a certain trade in a certain way because of the time that it might take to watch the trade, or the type of decisions that you have to make until you've not only executed the trade, scaled in, out, whatever, but when you close that trade, you have to be able to be ready to go the distance with any given trade. So do you have to claim one style and just stick with it? No, I mean, of course not. You have a lot of different options. I personally, I used to think that I was one kind of trader, and I didn't see how any other style would ever mix or would ever become a part of that. So it's something to consider. You don't have to stick with just one kind of trading. You have the ability to move across. If your schedule changes from one day to the next, I know some people never have the same schedule. If that schedule changes, then as long as you know what it is and you have the patience to go through and time out every day and how you're going to approach it from one trade to the next, and how one could pull over into another day or in another week, or I mean, if you've got that figured out, more power to you. But it's one of those things to consider. So in getting started, I would probably recommend that you take the approach that you find one thing that fits the kind of time schedule that you're going to be able to accommodate. Very important. Okay, back to the first definition that I wanted to go into, definition of swing trading. How many people in here that know what swing trading are, how many people classify themselves as a swing trader? Only by mistake. I understand. I've felt that way in the past. I understand what you're saying. So far, I don't see anybody that really identifies themselves as a swing trader. Well, Investopedia says that a style of trading that attempts to capture gains in a stock or currency pair within 1 to 4 days. Okay, 1 to 4 days. Swing traders use technical analysis to look for trades with short-term price momentum. These traders aren't interested in the fundamental or intrinsic value, but rather in their price trends and patterns. Okay? So the willingness and the patience, the willingness, but really the timing has to be there. If you're not willing or able to hold the trade for a few days with the hopes and intention to close that trade out for the kind of profit that you're looking for, then you probably don't want to go in the ring. you probably don't want to mess with it. Something to consider. So no swing traders in here. I was expecting at least one. Well, okay, excuse me. So we do have one. Okay. Next definition, next type or style of trader. Definition of a day trader. Okay, you guys can see the definition here. I'll read it, but as you're reading it, if you identify with being a day trader, please let us know in the chat box. Let us know that you're a day trader, or this would fit. Okay, I'm getting a few of them now. Okay, so we have day traders. We were in a webinar just recently, and Mike asked a question to people as far as how much time they have to trade, and the vast majority of them said a few hours a day to almost the entire day. Okay, so we've got quite a few that say they're saying day traders. We have one person pointing out that it's not that simple. RoboForex, it's not that simple, especially with EA trades. They can last 1 second or 1 month. This is a good point. You can't. This goes back to when you choose a strategy, you have to determine if that strategy or that system, that expert advisor or robot, as we've earlier defined in previous webinars, you have to be able to determine if that system or strategy, that robot, if it's going to get into a trade, if it can't hit the target profit it's looking for, how long it's going to hold that trade, or how long it's going to hold what we call a basket of trades, or a aggregate position of several trades across different, maybe different pairs or different times depending upon the strategy. This is all stuff that we have to consider. Definition of a day trader: an investor who attempts to profit by making rapid trades intra-day, within a day's time. A day trader often closes out all trades before the market closes and does not hold any open positions overnight. Okay? Don't leave it up to the boogeyman. don't hold trades overnight. You don't know what's going to happen in different sessions. There's a certain level of control that I think is synonymous with day traders. I think it's almost something embedded in the way that they trade. That same person says, Ben, for me, a day trader. But yes, what we're referring to for the most part, I will say, is getting started manual trading. That's going to be the focus of this today, and I probably could have done a better job explaining that. But yes, some of these things do relate to trading automated systems as well, but we're talking more specifically about your trading. Okay, so it looks like the majority of everybody here is manual traders, and day traders is what you're looking to do. Next definition. Scalping. How many scalpers do we have in here? And this is how I got started trading. I'm sure a lot of people. How many people started trading as a scalper and then changed their approach and are trading something different? A couple people. Okay, so I'm not the only one. And I wouldn't say that I changed the approach as far as how I trade. I don't no longer scalp. I like scalping. I like being able to go back in and pick up on something, news trading or something like that. If I jump into something on some kind of an announcement, okay, we've got a couple more. But I like the ability. There's something nice about scalping, and in my opinion, every trader that's in it for kind of the rush, every trader that's in it for the rush is also a scalper. They might be a swing trader, they might be a day trader, they might be the next one we're going to go into, which is a position trader. But if they're an adrenaline junkie, there's a good chance that they are going to be a scalper as well. Definition of a scalper: a trading strategy that attempts to make many profits on small price changes. Traders who implement this strategy will place anywhere from 10 to a couple hundred trades in a single day, in belief that the small moves in price are easier to catch than large ones. Okay, so here's the next question. The smaller the time frame, or the smaller time that you spend in a trade, what different things do you have to consider as a scalper? Hal says, stealing candy from babies. What kind of things do you have to consider as a scalper? There's different obstacles. There's advantages and disadvantages to each one of these. What's one of the obstacles or disadvantages to scalping? It's a very obvious one if you've been scalping before. Okay, I see a couple people that are responding, that are giving that response. This is pretty easy. If you've done this before, if you've been in and out of the markets on a quick grab them, get them, and run approach, then you have to be conscious of execution, the spread. You have to consider when you jump in and you make any given trade, what's it going to cost you to jump in and jump out? It might look like a great trade. You might be able to pinpoint exactly what it's going to do when and where. You really, it's when. You might be able to determine exactly when it's gonna change any given direction, and you might pinpoint the highs and the lows, and you might have it all figured out. But if you're in so quick and you're doing it a lot, what do you have to figure out as far as your broker? I have someone saying, I don't like it. High anxiety. Some people can't handle the stress of scalping. It can be kind of stressful to jump in and jump out, especially when you look at a longer time frame. If you open things up and you say, okay, I'm going to jump in on a scalp trade, you look at the larger time frames and you kind of go back and forth. How many of you at getting started will jump from one time frame to the next like mad, just moving back and forth, trying to figure out different time frames that might make sense? We do have somebody. Okay, yeah, it's and there's another one. So yeah, we do have people that do that, and there's nothing wrong with jumping back and forth from time frames to see what they're doing. Say the 5 minute or the 1 minute or the 15 minute compared to the daily chart or the 4 hour, the hourly. It doesn't matter. This is kind of what we do, but to keep your head in the game, to keep you psychologically prepared and ready for every next move and sane, quite frankly, it makes sense that you consider some of these outside factors that you don't have a whole lot of control over. One of the things that we recommend as a trading company is a lot of times we recommend that you look very closely at the broker that you're choosing to trade with, and you really kind of consider what their spreads are like. How much are they charging you to do business at that brokerage? Okay. Next one, position trader. Definition of a position trader is a type of trader who holds a position for the long term, from months to years. How many position traders? And I rarely get a position trader in a webinar, but it happens. Months to years, you guys. This is long-term traders are not concerned with short-term fluctuations because they believe that their long-term investment horizons will smooth these out. And there is a lot of truth to this. This is one of those where it's all relative when you look at the difference between a 5-minute trader to a daily trader, a position trader. Depending upon how you're looking at it, there's different advantages to opening up and allowing yourself more time. They feel like it's going to smooth things out for you. Okay, so consider that. Now, one big benefit to longer-term trading is the fact that you don't get eaten up by the spreads. Okay, so I want to point out that if you're scalping and you have, let's say, for example, you're jumping in and out of trades, and you kind of figure out how much time you've got to do the trade. You consider your position, and if you're position trading, the last thing that you're worried about really is your spread. You really don't have to worry about it. If you had a broker that maybe the spreads weren't consistent or maybe they weren't perfect, it's really not that big of a deal. You're going into this for the long haul. You're going into that broker because they don't play any games with you. Maybe because you know that they're a very solid broker. I generally recommend, depending upon the strategy, I recommend if you can get what they call straight-through processing, or if you can get an ECN connection, okay, that electronic communication network, that link where it is what it is and it's clean and fast and you don't have to worry about paying high spreads and things like this. I recommend that you go that route regardless. But sometimes I've seen people where they actually will be a position trader and they'll prefer to trade a complete different way because of how much things are going to affect them in any given way. I mean, it really just kind of all depends. So position traders hold their trades for a long time. I didn't see any position traders in here. I'm just going to read through here and make sure. That's how I lost a lot of money in the crash. That can be rough. See, there's other obstacles on the scalping side. If you jump in there, there's a good chance that your trading is going to get eaten up a little bit by those spreads. If you're position trading, it's a whole other ballgame. You've got to worry about taking that position. You've got to consider what kind of news events and what kind of fluctuations are coming in the long term. You really have to have some foresight to be a successful position trader. You just have to be able to look into the future a little bit and be able to kind of determine where things are headed. 401ks, IRAs killed. Oh man, that is brutal. And same for most other people. Investment advisors should have been. Okay, so I'd like you guys to, if you would, I'd like you guys to pull out a calendar. And as getting into trading and kind of beginning traders, there's something that you really ought to consider. I'd like you to pull out a calendar, and I'd like you to consider what kind of trader you are going to become. Now, like I say, doesn't mean that when you pick one trading style or approach that you've got to stick with it. If you want to go in and actually print up a calendar, you can go to this website at the top here. You can print that guy off, and you can actually go through and mark it up if you want to. But that's all I'm recommending, is that you grab some kind of a calendar and you go in and you utilize what that scheduling is, because it's really, it can make or break you, just not knowing how or when you're going to get into something. Some people will have the opinion or the attitude that, well, I kind of move with the punches depending upon what's going on. Someone says Forex, all day, all night trader. You want to be able to determine how you're doing this. Now, as you look at the schedule and you kind of go across the board, I want you to start out with maybe just a monthly calendar and go into that calendar, and for the next month, plan out what days you are going to be trading. Next to the day, when you pick a day, okay, I want you to not only pick a day, but go in and write how much time, what time within that day you're going to be able to trade. You have to be able to determine when you're shutting off. And if you know your sleep schedule, if you know when you're going to sleep, and you know that you want to be watching that, maybe you're taking a scalp trade, or maybe there's some kind of a news event that you've paid attention to that's happening, maybe in a long-term trade, consider that. Mark your calendar with those things. If you have an idea as to when things are happening, it's going to make such a big difference. I've seen people improve their trading by over 50% with this one very simple concept. This goes into having a trading plan, and this is probably something that we'll go in and address at a later date. More specifically, we've brought it up just briefly in previous webinars, modules, but this is really something to consider. So go in, pick each day, and plan out the next month. And I'd love to hear back from you guys to see how much this makes a difference. But go in and determine what days you are planning on trading. And it's okay if you jump in and you do a little bit of training otherwise, but figure out what days you're going to go in and trade. And then from there, mark the times that you're going to be able to trade and what you're trying to figure out. Now this is, of course, what we're doing is going to work itself into a more considerable plan, and that's your trading plan. And we'll talk about how to execute a trading plan, how to go into that stuff. Like I said, I know that Mike has gone into it a good amount, and will very likely do it as well in the Forex 101 modules. But go through, mark out, fill out an entire month worth of this information. When you and if you want to, if it makes it easier, maybe write in when you think you're going to wake up, when you feel like you're going to go to sleep. Maybe that's one of the first things. From that time, darken that out of your opportunity or the time that you very likely will trade. And then go in and write when you're planning on trading. If you're placing trades and you see what your schedule's like, one of the worst things about getting started in trading that I see from some people is they get into it with an idea of what it takes and what it's going to be, and they find themselves not sleeping because they're so excited about it, they're into it, You guys, you want it to be healthy. You want it to be something where you're getting enough sleep, you're feeling good about yourself, things are making sense. So you really want to do this. Okay. Hopefully this is making sense. There's a video that I was going to show, and I might just show it here. But while you're marking that calendar, I want you to kind of think about that. I'll play this video. I don't believe you're going to be able to hear it, but we'll see if this works. If I can pull this off. If you guys can hear it, if you can hear it, let me know. Let's try this out. Okay, make sure that the video, it'll play. I'll check and make sure it's going to play. Give us just a second here. Okay, well, looks like I'm not going to get the video. I'll explain kind of what I was going to show. I was going to show a little video talking about, and it's a really short one anyways, but a little video that actually is talking about timing and in the markets and what you can do as a trader to kind of better prepare yourself of what one person has done that's made a very big difference in their trading. Okay, you guys. So here's the homework for you, and this is what I'm going to ask that you do to better kind of prepare yourself for this upcoming for this month. Maybe it's the rest of this month or this next month. Take an entire 30 days, and I want you to take into consideration what it's been like with anything that you've done, maybe demo trading or anything else. Maybe you're just getting started and you can't relate it back to something else. But consider where you've been and what you've thought of where you've been, and then make a very conscious effort. Make a very conscious effort to go in and not only mark the schedule of this calendar, but go in and actually make changes to the calendar. Write in, pencil in if you have to, but write in when you're going to not only trade, but how long you're planning on being in the markets. Keep in mind that sometimes you'll get in and you'll actually you might sit down and do nothing but watch charts. You might just look at charts. Who's done that? Who before has gone in looking and expecting to make trades and just sat for a few hours and not taken a single trade? I do it all the time, someone says. And you know what? That person. I would probably venture to say, okay, we've got a few more that say that they have. I would probably venture to say that you're looking for a very high win rate. You're not messing around. You don't want to dilly-dally with in and out of a lot of different trades that aren't going to add up to a profitable equity curve, and that's understandable. So I would like to see how many of you are going to do this. How many of you guys are going to go in and plan out your next month as far as when you are willing to trade, when you're going to be awake. And when I say awake, I'm saying, okay, I'm going to wake up at 6 in the morning, or maybe if you're trading the London session, you want to get up earlier, whatever. I mean, that's the other part of it that you've got to consider is one part of timing is looking at the different sessions, whether it's the London session, New York session, Asia. It doesn't matter what you're doing, as long as you know when things are going to happen and when you have to be up and willing to watch that trade. Now, given you can place pending orders, you can do different things. That's kind of another day that we'll get into that. There's some great tools that we have that are established to do that. And this last webinar, I want to point out that we went into this last webinar, we went into MetaTrader a little bit, and we showed PipStat, a trade management tool. We also showed, I think, a little bit of Momentix and of trend entry. I want to make sure that we didn't leave anybody behind that was interested in getting some more information about those, so that's another thing that I want to just touch base on. If you're interested in finding out a little bit more about those tools, go ahead in here and leave your email, and we'll reach out because we might have missed somebody from before, but go ahead and shoot us an email in this webinar. Okay, so I'm hearing I'm hearing some people say, I'll try. I have one person say, we'll try, or I will try, maybe. Okay, so let's say you're an Olympic athlete, okay? What happens when an Olympic athlete tells their trainer, I will try? Yes, chances are I have someone that's posting Yoda. Yes, and I know exactly what you're talking about. There is no try. That's correct. So either you're going to do it, or you're simply just saying I will try means I won't do it. So that's the moral of the story here. If you're going to write this stuff down, do it. If you're serious about seeing a difference in your trading, then write this stuff down. Figure out when you're able to make different trades. You know that scalping is going to mean that you're going to typically jump in, grab some pips, and get the heck out. Okay? And if you make a certain number of trades and you don't hit your goal, don't get into revenge trading. You're probably going to not only are you not going to get back what you had, you're probably going to give up more than you ever wanted to. Consider some of the other things that we talked about. Do or die trying. That's what I did. Died, I mean. That's what somebody said. Okay, guys. Well, we have several other webinars. We've had different presentations and things that we've put together for some of the tools. Keep in mind our focus in this webinar is really to kind of establish some of the basics of different trading habits and kind of set the bar for what we're trying to do, goals and all. So thank you, everyone, for being with us. If there's any other comments or questions that you guys have got, go ahead and shoot them to us. But we appreciate you being with us. We're going to go ahead and close down module number 6, trading styles and types of traders. Thank you for being with us. Have a great day.